Hello, welcome. My name is Pete Calabrese. I'm CEO of CanAm Investor Services. CanAm is one of the largest and certainly most successful regional centers in the history of the EB-5 program. CanAm Investor Services is our wholly owned broker-dealer affiliate. We have the great pleasure today of being joined by Mr. Paul Fegan and Mr. Jason Auerbach from Navis Wealth. Paul, Jason, welcome.
Thank you.
Glad to be here. Thank you.
Thank you. Thanks for joining us. So today we're going to talk a little bit about the planning that goes into an EB-5 investment, really from a wealth advisory standpoint. So we talk all the time about how large, personal, and really intricate of an investment EB-5 is. And oftentimes we'll talk about from the EB-5 and the immigration perspective of it. What I think is really important that we talk about, but doesn't necessarily get as highlighted, is a lot of the steps that need to be taken before you actually make this investment, and especially before you potentially come to the United States. So we have the great pleasure of being joined by these gentlemen today who are going to help to talk about some of that planning and some of the steps that you can take to be better prepared for your ultimate transition through an EB-5 investment to the United States. So maybe Paul, Jason, if you guys could talk us through a little bit about Navis, about your history, what you guys do, and we could talk a little bit more about some of the subjects that we wanted to cover today.
Sure, happy to. So Navis Wealth Management was founded in 2018. We are a multifamily office, so we help clients with financial planning, investments, taxes, estate planning, insurance, basically anything that has to do with your financial world. Personally, I have over 20 years experience in cross-border planning. So I have a lot of experience working with the US tax system and how it integrates with foreign countries, whether there's a tax treaty or not in place. And that because it really makes a real big difference at the end of the day that you maximize what opportunities you have in the tax code in both the US and your home country. Because there may be opportunities where you can really save a lot of money on taxes or just have much better experience going through the process.
And given Paul's background, EB-5 really fits naturally into what our firm is already doing. Paul did this, like he said, for over 20 years with the cross-border planning. So this was a natural fit, and we really appreciate the opportunity to partner with CanAm in this opportunity.
Oh, fantastic. So I think to me, there are steps that can be taken when you come to the United States, and we can touch on those maybe in a little bit. But I think what's more important is really a lot of the planning that gets done before someone comes here, before someone sets so really before someone even necessarily moves forward and makes their EB-5 investment. So if you guys were to say, what would be two main issues that a prospective EB-5 investor should look at or be aware of before they start to apply for an EB-5 investment?
So the first thing that someone's going to need to understand is when you become a resident alien in the United States, so getting your EB-5 visa or your temporary green card, your entire worldwide income is subject to US taxation. That's the number one thing that people need to be aware of. Even if it's just a little bit of income, let's say a small pension income from your home country, it absolutely needs to be reported in the United States. So people need to understand that what your reporting requirements are at your home country are going to be different in the United States. The second thing that you really need to focus on are what kind of assets do you have overseas? So if you have a pooled asset, something like a mutual fund or an ETF exchange traded fund, those are what we call pooled assets. Now, that would be viewed in the United States as what's called a passive foreign investment corporation. So a good term to remember is PFIC. So if you have overseas investments, you need to understand what the consequences would be of holding those investments and what it would mean for US taxation. So the reason they get into it is because most pooled assets overseas do not report income information back to the United States. So the United States taxation system takes a very dark view on it, meaning that they're going to assume that there's more income being reported than what you're aware of. So there are reporting requirements that people need to be aware of, and if you don't report it correctly, then you could be subject to a large tax and penalties. Those I would argue are the two main things that people would need to speak to, and then there are obviously a number of other planning issues that Paul and I have, can address, that people need to be thinking about whenever they come to the United States. So estate planning, which is something Paul's very good at.
And even on the income tax side, if you have in your home country, you have an operating business, you own a factory, you own something there that is an operating entity. There are ways that we can actually put something between the United States and that entity where we can minimize the tax impact to you personally. If you're not living off the money that's being generated, if the money is just staying in the business, or you have other assets you can use, we can put it into a type of a corporation, which will shield it from U.S. taxes, and then you'll only be liable in taxes that of money that you take out of that corporation. So if there, like Jason touched on the investments, which is a big issue, and then there are workarounds for particular types of business that people may have.
And that Paul makes a good point, Peter, which is it goes to the very first thing that you said. When you're thinking about coming to the United States, the first thing you need to start doing is planning what are the impacts going to be on your current asset and income situation. And then the second piece is what will be your income and asset situation once you get to the United States. So planning is absolutely the number one thing that we recommend people think about when they're considering this process.
Right, man. I couldn't agree more. Right. And I think that the best ways to really is to maybe break these down into some separate type of mindsets is your taxation and making sure that everyone wants to make sure that you're doing right, that you're coming and you're being a good citizen and that you're paying your part. But what you don't want to do is put yourself in way of obligations that have no bearing on your current status, your current situation, that could very easily be more adequately planned for as you're moving forward. So maybe if you guys want to talk a little bit more about maybe some of the types of income or the types of assets they might be receiving that they might be subject to taxation that they might not be aware of, and then maybe some of the ways that they could look, obviously in a broad sense, uh, uh, protect themselves against maybe some of these obligations that are unnecessary to be putting themselves subject to.
So
Sure, and there are some that people get caught up in things very innocently often. We had a client who received a small pension in their home country, and it was less than $20,000 a year, and it was below the threshold that required reporting in the home country, that required taxation in the home country. So he figured he didn't pay taxes there, he didn't have to pay taxes here, never told anybody about it, lived here for 10, 12 years, and all of a sudden mentioned it in passing, oh, I've got this small, $20,000 pension, and like, wait, we've done your taxes for a decade and never picked that up. You never told us about that before. And so it was something he wasn't trying to avoid taxes on it. And he was actually in a country that has a tax treaty where he wouldn't have paid extra taxes. He would have paid more in here, but he got to turn it back in the home country. But it was just, you have to realize there are things that you don't necessarily think about because it may not be taxed in your home country that is in fact taxed here.
that's a really good point, Paul. The number one thing that we find from clients is it's not so much that they are looking to not share information, they just don't think about it. A great example is we had a client from India who had a number of properties that were owned by his mother, but he was set to inherit them upon her passing. Well, this was never disclosed to anybody because he didn't think it was a big deal. And when she passes, then the assets would just go into his name. But these were investment properties, and these investment properties were going to yield income. And if that income is not properly reported in the United States, then you can have significant penalties and fines. So it's really very important that when you're speaking to any professional when you come here, no matter what the small detail is, it's very important that you share it with your advisors when they get to the United States. The United States takes a very, very broad view of what needs to be reported. Now, that doesn't mean that you can't take steps to minimize your taxation or other steps like that, but you still are required to report the information. And that's the most important piece.
And
Um,
your advisor can only help you minimize, structure ways to minimize the taxation if they know about the situation. Because there are lots of ways, like for this client, the Indian client, there was a simple way to address it upon, through his mother's plans. But if we had known about it, it would have been too late till the assets were got in his name, and then all of a sudden he had a tax problem. And then also, once the government knows you have that there, they want to know a lot more about it. So if there are ways to, in this situation, put it into an entity that wasn't required to report to the U.S., um, the government didn't know about it and didn't ask any other questions.
I'll give you a great example that was a lot in the news last summer, Peter. There was a court case that ended up with the Supreme Court about what you have to disclose from a reporting income from income overseas. Now, if you own more than 20% of an overseas corporation, even if you're not taking distributions and that company is profitable, your piece of that company will have a pari passu obligation on the income. So even though they weren't receiving distributions from their company, they were still subject to US taxation. And so, like I said, the devil really is in the details. So we always tell clients, no matter who you're working with, the more information that you can give, the better it is. And like I said, as long as you're reporting it and you're planning for it appropriately, doesn't mean that you're going to have a large tax consequence. It just means, again, we're going to use this word a lot today, planning, and dealing with that once you have the information available to you. That is so. And Paul was talking about assets as well. Understanding you could have, for example, $1,000 S&P 500 Spider ETF. This is a typical thing that a lot of Americans have. There's nothing cute about it. It's a plain vanilla ETF. However, if you do not report that to the United States, your taxes and fines could actually be equivalent to up to 50% of your holdings. So you have to be very careful and very particular about what you report back to the US government and making sure that your advisors are aware of it as well.
Yep. Stop.
We had this conversation.
You were mute there. Sorry, I couldn't hear you.
Oh, sorry. Yeah, and I think this also speaks to making sure that you've got the right type of answer that you.
Yep.
We have this conversation all the time with EB-5 clients, in that you need to talk to an immigration attorney on its broadest sense, yes, but what you really need is an EB-5 attorney, because it's a very specific petition that you're putting through, and there's specific work that these types of professionals are going to work with. If you're coming to the United States, you need to work with an advisor who is going to be able to help you with your taxes. But really, you need to work with someone who is a cross-border expert who knows the right questions to ask. Those are the types of things that help us to protect ourselves from ourselves. Is what should I know that I don't know already?
Here's a great example, Peter, of something that you may not know. And Paul and I were recently working with a client overseas, an Asian country. And when he informed his bank that he was going to become a resident alien in the US and going to do the EB-5 process, understand that your bank may take steps because they don't necessarily want to work with you. So for example, a lot of banks overseas have reporting requirements that if they have more than 99 American citizens or resident aliens, they have tremendous reporting requirements back to the United States. So if you're considering an EB-5 visa application, you need to also understand what are the impacts going to be with your current investment professionals and your current banks. Because some banks may say if you're becoming a resident alien in the US, they're going to require you to move to a different institution.
Yeah, he was given 30 days to close his accounts. So luckily these were personal accounts and easily replicable, but if they were business accounts where there's a lot of stuff going on and payments in and out, it could have been a big problem. So yeah, again, planning.
Yeah, absolutely. So are there any pathways that you guys could, that you talk about frequently with your clients in terms of how you can take steps to protect these assets as you come to the United States, or to better plan for some of the implications that might be coming from your presence in the United States?
Yeah, on the investment side, where Jason was talking before about PFICs, the passive foreign investment corporations, those are from pooled investments. The other way around it is if you buy individual stocks or bonds. So you can take an index and you can buy the stocks that are in the index just individually in your account and kind of replicate an index, or replicate the top holdings in an index. And that's fine from a US tax standpoint. Is when in a pooled vehicle that it becomes problematic. There are some funds, though there's not many. They can have high minimums that actually do dual reporting. So they report in their home country based on their tax laws and their tax dates, and they also report to the U.S. under U.S. tax paper, under U.S. tax forms. So there are some, and there's getting more and more, but they're still fairly, difficult to find and not that great. The easiest way is either if you're looking to come to the U.S. from basically permanently, bring the bulk of your investment assets to the U.S. If you have assets that you can't, whether operating entities or, one of the things that gets problematic with people and they don't even think about it is retirement plans.
Yep.
Because if you have a retirement plan, you have in the U.S. what we consider a 401k, or your retirement savings through your business or through your employer. Those are typically held in a pooled vehicle, and you cannot take it out when you're below a certain age without penalties. So from a U.S. tax report, that actually gets reported as a PFIC, and you get taxed on the appreciation that arises year over year. Um, so that's something where a lot of people don't even think about it because it's a retirement plan. There's no taxes. This is for 20 years from now. I'm not going to even touch it for a long time. But that is something and it's also difficult to move to the U.S. In most cases. So there has to be some careful planning around retirement plans out there if people have them in their home countries, and especially if people have sizable plans in their home countries.
Peter, there's a great quote from a tailor or from a construction guy: measure twice, cut once. Right. So I think it's the same when you're thinking about coming to the US. Any person who's going down the EB-5 route, you really need to check everything and double check it, because there are so many small details that you may be unaware of that can really catch you unawares. Not that we can't try to ameliorate that situation but the more you know up front. So one of the things we recommend is, once you're considering this process, you should really have an in-depth conversation with a financial advisor, planner, tax planner in the United States, who can really give you, kind of the direction to make sure that you're not going to get caught up in any interesting situations. Is the way I would term it. For example, we had a client recently who, they're an oil executive who was working in an overseas company, and their taxes were done by their corporation. Well, when they came to the U.S., everything was fine, but now the wife is still based in the United States, but they're back overseas, and now from the accounting perspective, their corporation is not doing all of the right accounting, and we need to make sure that everything is done properly for the person who's still here in the United States. And more importantly, when this executive comes back to the United States, what are the implications going to be for that person and their taxes and their overseas assets? So like I said, there are so many different examples of things. I don't know what I don't know, and I would advise anyone who's come to the United States, start to ask those questions. I don't know what I don't know, so what should I know?
Yeah.
It sounds like everything that we're talking about is talking about taxes. That's a big part of it, but it's not the entire part of it, right?
Correct.
And
Yeah.
and your analogy really kind of leads me into maybe another aspect that I think is really important for people, which is the estate management of it all. Because you're coming to the United States, you're coming with your whole family. But it's not always so straightforward that mom, dad, the kids, everyone comes all at the same time. There could be some different schedules as people wind down businesses overseas, but there are implications as they come. But making sure that you have prior planning from the tax side of it, we've talked a good amount about, but from the estate management side of it as well. I think that there's some important considerations to make. The documents that you have, how this is going to affect your spouse and everything. If you guys maybe want to touch on that a little bit more in terms of maybe some of the broader estate management aspects that people can be attuned to.
Yeah, one of the big things we always recommend people do is we want to carefully go through what type of wills and estate planning documents they have in their home country, and either have ideally you have one document that covers your U.S. and your home country assets or your foreign assets. So there's never any, not miscommunication, but um, difference of dispositive provisions. Um, but if that's not possible, we want to make sure that the two documents line up. That if everything's going to, a third, a third, a third to your three children, one of them's not 50%, 25, 25, the other's third, a third, a third, because then it leads to mass confusion of, well, what did mom and dad really want to do? Was it really a third, or was one of them getting 50 and everybody else just getting 25? So we want to make sure that everything there matches up. And then as you do your planning, it's very important to look and understand if you are considered a resident or non-resident in the U.S. at each point in time, because that has a huge implication on what your state taxes could be and whether your worldwide assets or just your U.S. situs assets are going to be taxed. So this is where it's very important working with your accountant, your U.S. accountant, your U.S. estate attorney, and a planner to really understand the not just what your situation is, but what is your resident situation at that, and what is it expected to be for the foreseeable future.
And that's a really good point, Paul, because Peter, one of the things that most people don't realize is they think once they get their temporary green card or their permanent green card, that they're treated like a US citizen. And it's not an accurate situation. If you are, for example, if you are a green card holder, you do not get the marriage deduction. If something were to happen to one of the spouses, it doesn't pass free of estate tax to your spouse. That's not to, or to your children. Now, that's not to say that there aren't steps that you can take. And this goes back to the planning for the estate planning. You could use things like what's called a qualified domestic trust, a QDOT, where, again, this is a legal entity in the United States, which can help replicate what it would be like between a married couple if one person were to pass. And then because it's already in the trust, it doesn't get subject to the same estate taxes if you were an individual and you passed away. But again, that's a very big, I'll tell you a funny story about, I was at a conference once and, probably 30 resident aliens were sitting in the room. And I said, who here thinks that like being like a green card holder is the same as a US citizen? And 90% of the hands in the room went up. And so these were people who had already gone through the EB-5 process. They were here with their temporary, and even these people who had been advised were under a mistaken impression about how their estate had to be set up. And again, I can, Paul, who's been doing this for, over 20 years and has tremendous experience with the cross border, and myself as well, we see this time and again. Most of the time, people come to us in the United States and they're not aware of it, and then we have to go back and try to make corrections. So again, this comes down to think about your estate. It's going to be very, someone who shows up here and they start as an F1 visa, they're here on a student visa, and then they transition to EB-5 temporary green card, then they get their green card, then they get married, then they have kids. All of a sudden, you could be 3, 5, 7 years down the road. If you haven't been speaking with the proper advisors, your estate may be set up incorrectly. And all of a sudden, you've added a tremendous amount of risk to everything that you're doing in the United States unintentionally.
Yeah, that's good. That's advice. So I guess, and again, these are all broad concepts, and
Yep.
these are things that every single investor's circumstances are very unique to them, which is why you need to talk to someone. You don't just, go off of searches. But for these investors who have now, they've now made their investment, they're now moving forward, they're ready to come in, then they start to come to the United States, right? They've made good planning, they've done the correct steps coming in. Now they're actually in the United States. What are some of the bigger issues that you see from a potential EB-5 investor as they start to enter into the United States?
I think the biggest thing is who are your relationships going to be with? Who are your banking relationships going to be with? What banks are going to work with you, understanding the foreign national characteristic of your accounts? There are a lot of banks that we have something in this country known as KYC, know your client, know your customer. So, and then they'll do something called SOW, source of wealth. It can be difficult for some banks to find the source of wealth when it takes being go overseas. So a lot of banks won't necessarily work with a foreign national until they can really establish where that money was, how it got here, and and of the sort. Then on top of that, just some banks don't want to work with foreign nationals. So again, it's finding the proper partners. So the best thing that you can do is it's kind of like a concierge who's going to talk to you about every step of the way. It's how am I going to buy a house? What's involved in getting a mortgage? What is if I want to buy a car? Are there any restrictions on getting a car loan? Hey, I've got children, so I've come from a foreign country. I've got young children. I've got a wife. Do I want to have life insurance? Again, if you're a foreign national and you want life insurance, there are only a handful of companies that are going to be able to work with you because again, you need to be able to prove your assets, you got to prove your net worth, your income, how are you going to afford this life insurance policy? So it really is about finding the right partners and identifying them even once you're here. Because again, your situation is going to change dramatically from the day you get here. Again, there are some people who show up as a family unit on day one, and you're going to address that differently than someone who transitions from a single individual student visa, becomes an EB-5 visa, gets a temporary green card, gets a green card. So I hate to say that every situation is extremely bespoke. And that's why, while we can have certain high level recommendations, I really would recommend that anyone who's coming here find a professional, talk to them, talk to your firm, and find the right partners who are going to be able to identify these issues. Because the last thing you want is someone scrambling after the fact.
Yeah, there's a lot that can be done ahead of time. There's limited things you can do in arrears.
Mhm. Yeah, I think there's just so much education to be had because, and so many of our clients are fantastically sophisticated. They're all, I mean, these are high net worth. These are some of the more intelligent people that you're ever going to meet as you come through. But the United States financial ecosystem is large and it's also very diverse. And these are just certain products that people just might not be, aware of. I mean, we could probably do an entire other series on the insurance products that are available as you come in. It's just an entirely huge, and it's great. It brings so much optionality to people who are in the United States. It's what makes the United States, more of it's a real draw for people who are coming from other countries to have access to all these financial markets. But there's a lot of different components of it. So learning about what those different components are, as well as the counterparties within those markets that are going to be more available to foreign nationals coming in, are hugely important so that you can take advantage of all these different opportunities that are coming in as well. I think
You know, I liken it to being dropped off in a town where you don't speak the same language. And how are you going to find a place to sleep that night? How are you going to find food that night? Um, Now, in this case, language, it's the financial language that is
yeah.
going to be foreign to people. So that's a good analogy, is showing up in a town where you don't speak the language and how am I going to find a place to sleep? How am I going to find a meal tonight? Now translate that to your economic life. Very few people understand the difficulties of the U.S. taxation system. Americans don't understand it. So now imagine the impact on a foreign national when they get here.
No, I mean, absolutely. And the worst thing to have to live with is regret. And who hasn't made a mistake where you look up and you're like, man, I can't believe I did X, Y, or Z, and it led me to that, result. Can't cure for all of those things. Unfortunately, we're all human. We're all going to have those things that come to us. But there are pretty predictable ones as you're coming as a foreign national to the United States. And prior planning and proper management of these sorts of things can really help to avoid some of those so we don't have to live with some of those regrets. Paul, Jason, I mean, we've covered a lot on this. Are there any other points you'd like to hit to impart to our audience here?
I think it's most important to remember everything's always going to be flexible, and you want to build something that can be flexible. Because you're coming here, you may be coming with a young family. You have the anticipation that your kids are either going to either A, go back and do the secondary education back in the home country where you went to school, or that they're going to stay in the US. And by the time your kids become 18, they may have a completely different idea than you did. So you need to be able to be flexible in, in how you're structuring your life, where you always are going to have a foot in two different countries, most likely. And you need to stay flexible so that you can adjust to something happening on one leg or the other.
And I would just say, transparency and openness is the most important thing when you get here. Whomever your advisors are, the more you tell them, the more they're going to be able to help you. Um, that is the number. And if you go back to what we talked about at the beginning of this call, you can have information and you have to report it to the United States. Doesn't necessarily mean there's going to be a financial impact on you. But some people feel that if they report it, there's going to be an impact. That's not necessarily true. So reporting, transparency, and openness, those are the three things I would tell the people who are listening to this to take away from this. Yeah, planning is very important. Planning is absolutely essential, but transparency is as important, if not more important than planning, because we can't plan for the things we don't know.
Fantastic. Well, I mean, guys, I think that this was tremendously helpful. I think that there are still lots of questions I'm sure people would have, but as you come in, one of the things we try to guard against is not knowing what we don't know, right? So I guess one of the things to go into this process knowing is you have to ask the questions about some of these plans. You have to ask the questions about what my tax ramifications are going to be when I land in the States. Have to ask the questions about how I can best safeguard my estate and have those plans going forward as you make this transition. So if hopefully people can take that away from this, I think that would be fantastically helpful for people. And obviously, CanAm, we're always here. We're always available for any questions. Jason, Paul, no, you're very available for any.
Well, we appreciate this opportunity to share this information with the greater group. This is such a tremendous program that adds such a value, and there's so much opportunity for people who come to this country. We're really just proud to be a part of that, and we're proud to be a part of the CanAm, team. And so, thank you very much.
Well, thank you guys. Thank you guys for your time. Thank you, Paul. Thank you, Jason, and we look forward to talking to you again soon.
Thank you.
Thank you, Peter.